morning and welcome to the Alpha Pension Group Retirement Recap for October 2nd. And with me is Rob Milas, our Chief Investment Officer, Mark Salamone, our lead consultant. Hey, Rob, I don't usually get a good night's sleep, but I did last night. Did I miss anything? Any headlines? Any breaking news?
Of course, the news that is out is that the president and the first lady did test positive for COVID-19. Obviously sending the markets into a tizzy. Futures are off about 1 to 1.5%, depending on the index that you're looking at. So certainly there, added uncertainty in the marketplace. But looking back, obviously we just closed the quarter, and it was a pretty good quarter. And again, as you can tell, the bigger boxes, and there's a fair amount of green. But hey, if I were to have told you at the end of 2019 that we were going to face the biggest global pandemic in 100 years, which would drive unemployment to the worst level since the Great Depression, and the GDP would decline in Q2 more than any other quarter in history, and then I told you that the S&P would still be positive, you tell me that is utterly ridiculous, right? But it's true. Here we are.
Yeah, it seems like things will remain to be volatile. It has been a crazy year, as you pointed out. Who would have saw that coming? But we'll take it, right? So we're better off than I thought we would be also. But, to that end, Mark's going to talk about how this pandemic has been different than others historically. So, Mark, why don't you walk us through that?
Yeah, despite all that crazy news, participants have been pretty resilient in not moving their money around. So back in 2008, when obviously we had that financial crisis, we had a lot of people, especially those with larger balances in 401k plans, shift their money from equities to safer investments. Well, as a result, they missed that run up. So from 2008 to now, with the market going up, those people that moved and never got back into the market obviously missed quite a bit of growth. We really haven't seen that too much with the participants during this pandemic. A T. Rowe Price study confirmed that really it's a lot more muted these days, and most folks that are in target date funds have really stayed the course, which for the long term, that probably will help with a lot of people saving for retirement. And, a lot of times volatility can induce participants to make bad decisions that long term don't work out. So the good news is that might not have occurred here. And now talking about how folks are feeling confident about their retirement, well, the pandemic certainly has shaken some confidence. 32% of 401k participants right now do not know how long their savings will last. So those getting closer to retirement are starting to look at retirement, start to plan it out, and are starting to see that maybe that money might not be around forever. We have more people concerned with the idea that taxes down the road will be a lot higher than they anticipated. So taxes, the fact that they might live a long time, all the typical concerns are really starting to rear their heads. So people are starting, I think, focus a little more on how much that money can last. We have seen participants start to save more too. So for those that have been able to, keep their jobs, keep their income streams coming in, they've been able to start putting more away. So some positive news there, albeit with some uncertainty about times ahead.
Thanks, Mark. Yeah, and talking about perspectives about savings and retirement, pretty cool study that we found that shows initially baby boomers and Gen X's, they don't feel like they're going to retire at retirement age, which is usually accepted is around 65, 67 years old. They feel like they're going to have to work a little bit longer. But the positive news is millennials and Gen Z, they actually feel like they're going to retire early. And you may have heard of this. This is called the FIRE movement, financial independence, retire early. And I think sometimes the younger generation might get a little bit of a hard time with certain other things, but I have to tell you, they're great savers. They're really focused on this. And maybe it's because their parents aren't prepared and can't retire at 65. A lot of folks, over 67% of that population, feel that they're going to retire much earlier than 65. So that's pretty neat. And what's really interesting is to look in our client base, as we do, and we try to study the data points. Who's saving? What's the average deferral rate? So we can bring our clients that data to make good decisions and customize education meetings. We have found substantial saving rates with those younger generations. So hats off to those folks, and really good news. We love to see that. So thanks so much for joining us. We'll see you next Friday, but in between this Friday and next week, check us out on Twitter and LinkedIn. We always have some great content, and we'd love to hear from you as well. So thanks so much, and have a great weekend.